Begin our coverage of all the important global news this morning. Fed members have gathered for their first policy meet in the second presidential term of Donald Trump. Remember, word from the US president has already come in on being committed to lowering interest rates. The expectation is largely tilting towards almost 100% certainty that the central bank will keep policy rates in a target range of 4.25 to 4.5%. In fact, traders see the Fed on hold on till June, a span during which Trump's plans for tariffs, regulations and immigrations are likely to become slightly more clearer than what they are right now. Over the last three meetings, the Federal Reserve has cut rates, reducing its short-term borrowing rate by a full percentage point. Important commentary coming in from former Dallas Fed President Robert Kaplan. He also cited that three changes that could be disinflationary: the government spending cuts, regulatory review from the newly minted advisory panel dubbed the Department of Government Efficiency, and Trump's drill baby drill approach energy, as well as is expected as efforts to make the sector's architecture more efficient.
Alright, then keeping and going with key updates coming in from the United States, then consumer confidence has declined for a second consecutive month in January as people grew more pessimistic about the current policy uncertainty during Trump's first month in the Oval Office. Now, the consumer confidence index fell 5.4 points and is around 104.1 in January versus revised 109.5. In December, this, remember, was below market consensus of 108.1. Since his inauguration then last week, Trump has signed dozens of executive orders and threatened to impose hefty tariffs on US trading partners, the likes of Mexico, China and Colombia.
Okay, let's move over to IT, talk about tech and the latest on AI frenzy that has taken over the markets. OpenAI CEO Sam Altman has spoken of the strength between his company and Microsoft, which could fructify into an improved alliance between the two giants. Altman goes as far as to call the next leg of the relationship to be better than anyone is ready for. Satya Nadella responded to Altman's post on X, saying he is looking forward to all that's ahead. Remember, earlier this month, Microsoft lost its status as OpenAI's exclusive cloud provider. The announcement came after Trump unveiled his Stargate project, a joint venture between OpenAI, Oracle and SoftBank.
You know, AI has been the talk of the town, and amid growing concerns over the global impact of AI on how people consume and process information, major digital publishers in India have now come together to take on OpenAI for copyright infringement. In fact, the Digital News Publishers Association, or DNPA, which is an association that comprises media entities in the digital space, has now joined a prominent Indian wire service lawsuit against OpenAI in the Delhi High Court. In fact, Jaspreet Bindra, who's the co-founder AI and Beyond, talks about the concept of fair use in context of AI models and also discusses how the concept then applies to AI companies which are trained on data available on the internet. Let's go across and listen into what he then had to say.
I'm sure fair use is defined in different legal regimes differently. So I don't think that there is that much of a leg that either of them have to stand on, frankly, from the fair use thing. I think the way people have to look at it is, they need to take a step back. They need to say that, look, this technology is inevitable. It's going to happen. And what is the best way? And a lot of the data is going to be hoovered up, is going to be sucked up, public as well as non-public, to make these models happen. That is not going to stop. So in this scenario, what is the best way that both parties can actually come and make the best situation out of it? I don't think we can look too much at the past precedents, etc. I think, frankly, the fount of misinformation are not the AI models. We are looking at the wrong place. The origin of where the misinformation is social media, and that's where we need to look at for first address before we come to AI models.
Okay, well, lots is brewing when it comes to the artificial intelligence front, especially when it comes to OpenAI. But let's shift focus, talk about some earnings then. Boeing has lost nearly $1 billion a month in 2024 as it was grappled with a safety crisis, quality control issues and a damaging strike. The aerospace giant lost $11.8 billion across the year, its worst results since 2020, when the aviation industry was grounded by the COVID pandemic. In the 3 months to the end of December, when strikes were affecting the business, it lost $3.8 billion. Meanwhile, shifting focus to General Motors, because that fell more than 8% in trading, even as the company beat Wall Street's top and bottom line expectations for the fourth quarter, while forecasting continued strong results for 2025. Well, the world's largest luxury company, LVMH, which is Louis Vuitton Moet Hennessy, also reported better than expected full-year sales in the strongest sign yet of a potential turnaround in the high-end sector. Remember, shares of the French luxury goods giant are currently up around 18% year-to-date, having fallen more than 13% in 2024 itself. Sales also rose more than expected in the fourth quarter to December after falling for the first time since the pandemic in the 3 months prior. Meanwhile, coffeehouse chain Starbucks reported revenue ahead of Wall Street's expectations in quarter 4, but sales were flat year-on-year, coming in at $9.4 billion.
If you like this video, then like, share and subscribe to ET Now.